There are over 1 billion children living in poverty across the globe, and an estimated €3.8 trillion shortfall in funding to solve the problems they face. In this episode of The Big Question, I'm joined by Paul Ronalds, the founder and CEO of Save the Children Global Ventures, to discuss the future of finance for impact.
So, thank you very much for joining us. Many people will have heard of Save the Children as a charity, and so they might be wondering what you're doing on a business show. So can you just explain to me what is Save the Children Global Ventures?
Many of your viewers will have heard of Save the Children. We're one of the world's largest non-government organisations focused on children's education and health and protection. But 99.9% of the income that Save the Children generates comes from what I would call traditional means, so generally philanthropy or grants. And that's really important. But actually, if we look at what's needed to solve some of the biggest social and environmental problems facing this planet, it's woefully insufficient. We need more tools in our toolbox, and the only way that we're going to find the capital at the scale that we need is if we start tapping into private sector markets.
Let's take a little bit of a deep dive and look at the impact investing that you do. So can you explain a little bit kind of what is it and how does it work?
Yeah, so impact investing is very similar to traditional investing, except that an impact investor intentionally seeks out impact on social and environmental issues. And so from our first impact investment fund that we launched over 4 years ago, we've made 11 investments, mostly into education technology and health technology businesses. We've invested in one health tech business where some very smart doctors, actually based out of the US, came up with software that helped frontline health workers more effectively diagnose child and maternal health issues. This software on a tablet or on their phone takes them between probably 30 to 40% as effective as maybe a doctor here in the UK diagnosing child or maternal health issues, to being between 85 and 95% as effective. So we're getting a doubling in productivity, but we can also charge. So ministries of health and others saying, right, well, yeah, we're willing to pay for that service. And there are about 15 million frontline health workers around the world. So that's actually a reasonably sized market, really great impact story, and also potentially a good financial story.
What makes it appealing to investors, and kind of what sort of return can they get on their investment? Yeah,
so there's a sort of, I think, common misconception that impact investing means concessionary investing, and that's not necessarily the case at all. It can be. What we see is a broad spectrum of financial returns and actually different emphasis on impact as well. For Save the Children, we're obviously an impact-first investor, but we also see some pretty exciting financial returns as well, particularly in the health tech space. Because we've been investing through closed funds, we haven't exited any investments.
Okay.
So it's too early. We're only 4 years in. Now we've got some positive signs, things like the Taro, which was the AI fundraising business, grown 600%. We've got 2 or 3 of those in our first fund that look pretty significant. So we're targeting, sort of certainly a double-digit return on Fund 1. So better than 10%. And we think we're on track to achieve that. But you don't know until the last 2 or 3 years of the fund.
Okay, interesting. Who are the sort of people or organisations that are doing this investment? Like, who is it for?
Our products are absolutely targeted at sophisticated or institutional investors. We don't have any retail investing products yet. We're traditionally looking at different groups, family offices, for example, particularly what we call next generation philanthropists are looking to use some of their capital to have an impact on the world aligned with their values, so they tend to be attracted to our products. Foundations are sitting on billions and billions of dollars, and they give away maybe 5% of that a year, but the other 95% sits in often very traditional stocks and bonds. If just a small proportion of that endowment money was put into impact investing, aligned with the foundation's mission, suddenly we unlock a lot more money.
And so, looking at the other side of what you do, away from the impact investing, can you tell me a little bit, what is the Children's Impact Multiplier Fund?
Well, we talk to a lot of investors about our impact investment funds, and not all of them want to go down that route and actually invest. So what we've designed here is essentially a halfway house between a traditional donation and an impact investment fund. The person that's providing the capital still gets a donation, a tax-deductible donation, but we treat it like we do any other investment into one of our funds. So what we do is we look for opportunities where we can use a small amount of our multiplier fund capital to crowd in much larger amounts of private sector capital. So we're looking at one at the moment where we'll put in about $1 and we'll get about $10 of other private sector because of the way that we've structured it. So you get this really good leverage impact through the multiplier fund. The second way that we multiply the donation is that we're investing in businesses, and our hope is that over a period of time, often a little bit longer than our impact investment funds, we'll be able to sell that investment and return the capital to the multiplier fund. It's not an investment, so we don't have to give the money back to an investor. We're able to reinvest it in the next great startup that's aligned with Save the Children's mission. So you get that sort of, if you like, evergreen or revolving fund.
Do you have any kind of projections on how an initial donation kind of will multiply up?
Well, it will depend on how successful we are, but I mean, most of the investments that we're looking to make are going to be leveraging other forms of capital at least 4 to 5 times, and then of course that all gets revolved, and that is in perpetuity. So, you know, so long as we continue to make good investments, it should be there forever.
Wow, I can't do those maths, but
it's lots.
Yes. So thinking about the value that Global Ventures adds, you know, how much is it kind of currently contributing, and how do you see that growing in the future?
Well, we've got grand plans. It's still a relatively small part of Save the Children's overall funding mix, but we're actually targeting to raise $1 billion in new forms of funding for Save the Children's mission by 2030. However, if it's an example that other charities start to follow, and if we start to make this sort of impact investing something that is just what most foundations, most investors, maybe even pension funds start to do, then we can have the sort of impact on, you know, our most significant global social and environmental issues. We can solve poverty. We can address the capital needs. So this is important for Save the Children, but we also think it's important for the charity sector.
Thank you so much for joining us on The Big Question today. It's been a pleasure to talk to you.